Hello guys, it's that Dividend guy here coming at you with another dividend investing video, and this one's very special to me because this is the 100th episode of my Robinhood portfolio updates. That is crazy to me, guys. We hit 100 episodes. That's insane. I'm super excited to see, what 2, 3, 400 is going to be like, but I started this in October of 2019. Here we are, March 2020. I'm up above 150 subscribers. I'm up over, I think I'm close to 10 grand views. It's crazy. So I just wanted to take the intro real quick and just say thank you so much for supporting. I know I've been posting a lot. I hope you guys are really enjoying the content and the consistency that I have on the channel. But with that said, let's kick it off. Number 100. Let's go through. Let's look at the portfolio, how it's performed with the recent market volatility. Let's look at the individual stocks and how they're performing, and then what I've added to the watch list. So today, I hope you guys had a great green day in the market. Before we get into it, I hope everybody had a great day. I hope everybody's investing and are happy with their returns. So let's look at my portfolio, see how we did today. So today we're down about $210, not a big deal. On the week, we're down 318. The month, we're down 587. 3 months, we're down 1,200 or 7%. The year, we pretty much break even. We're up 938, up 6%. All time, we are up $700, almost $800, up 5.4%. So on the 100th episode, we're good long term, and we are red short term. This is coronavirus scare. And some investors will sell out and they will lose out on profits right now because this is the time right here, guys, just to mark it on 100th episode, right? This is when you buy stocks. This is the correction that dividend investors are looking for. This is the correction that people have been talking about for over 10 years. Since the big market crash, we haven't had a drop like this drastic, since the financial crisis. And then what I heard on Monday was that was the Monday or Tuesday was the biggest rally out of the biggest drop that we've ever had too. So we had the biggest drop since the recession, and then the biggest bounce back since then as well. So that is insane. That is super cool that we had not only the biggest drop, but the biggest bounce back as well. So again, guys, this is when dividend investors, this is what they live for. This is the red that they want. Warren Buffett did say, buy when there's blood in the streets. When people are afraid, when they're scared, when there's panic, buy. Because the thing is, people who get afraid don't understand the psychology of the market, right? I know it's investing, it's money. It's tough to kind of wrap your head around, but this is a psychology game. It's the human reaction to losing money. Most people, when they see it go down, they want to pull it out. Like, I don't want to lose any more money. But what they don't understand is if you just buy more, if you can afford it at that lower price, for dividend investors specifically, I'm speaking for, the yield is higher. So again, think of it like you're buying the new iPhone, right? Let's say I buy the new iPhone X. I'm sure there's probably a new one out by now, but say I buy the new iPhone X at $1,000 on Monday. Let's say today's Tuesday. Let's say last night I bought it at $1,000, right? I go back in. Let's say I go to fix something, or maybe I got the wrong color, need a case, something. Go back in and I see that phone is $500, right? Why would I not buy another one and go sell it online to somebody else? Think about that. That's exactly what people should be doing with dividend stocks, because technically you're getting the same product. Like, I get Coca-Cola at $50, it drops to $45. I get the same company. Unless you see a big news story about a CEO doing something wrong, or maybe they missed profits on earnings, something. If there's not a big news story about the individual company that you're looking to buy more. It's literally just people in the market are panicking, and the market as a whole is going down. It has nothing to do with some of the individual companies that you own in your stock portfolio. Like, I'm sure Coca-Cola will probably be affected by the virus. I'm sure, Altria is going to be affected by this virus. But, unless you see something fundamentally wrong or fundamentally change about your company within the past 4 or 5 days, you have no reason to sell it. If it's scare, if it's panic in the market, you need to act positively to other people, not understanding the opportunity that is in front of them. So anyway, so I didn't mean to go on a rant there, but that's literally the psychology behind the market is if it's low, buy more. Like everybody says, buy low, sell high. Well, honestly, if you look at it, most people sell low and buy high. We've been in a bull market for what, 10 years now. Like this is the correction that people have been waiting for. Dividend investors have been sitting around salivating with this huge pocket of cash, and they've been waiting to jump, right? They're lions that they're waiting to sink their teeth into good dividend stocks that have great yields because people don't understand how to invest in the market. This is the time to be investing. So if you were wondering how I feel about the scare and how stocks and stuff have been affected, this is the time to be buying, not the time to be selling. So with that said, guys, let's jump and see how the individual stocks did in the portfolio with that type of mindset. Let's look for deals. All right. Altria is at $41.91 right now. I have 98 shares, $4,100 of equity in the stock. $45.30 is our average cost. 26% of the portfolio is in Altria. So yes, I'm very exposed to the cigarette market, the tobacco market. I get that. I understand why this might shy some people away. I did double up on my Altria shares because I think that they're a great defensive play for times like this. Let's see how they're performing. So I'm down $4 a share. Not that bad. Not compared to what some companies have lost. Now, it looks really bad because keep in mind, I'm overexposed to this stock. So 26% of my portfolio is in it. That will go down. This is one of those stocks that I'm happy to say I'm dividend efficient in, which means when they pay me their $82 or whatever, I have enough with Coca-Cola to buy another share. So this month, I'm dividend efficient. I've lost $15 today. Total, I am down $322.55. So I'm down 7% in this stock. Not super worried about it at all. This is a defensive play. I will hold it till the day I die. Love Altria Group. So next, and let's look. Is this a deal? I would say it is. Anything below your average cost is a deal. So anything you can buy lower than what you got it before, you get a higher yield. The only issue when you have bulk like this, I bought in bulk with this stock, is that it's not going to lower my price by very much because I already have so much that it's going to take a lot to really replicate the amount I already have in there. So it might lower it by like 6 cents or something like that, but it's not going to be a drastic drop. So Altria right now is a buy for me. Next, let's look at Coca-Cola. How has it been affected by the virus, or excuse me, by the scare? Not too bad. Down what, $3-4? Not too terrible. 17 shares, $953 of equity, 51.10. So it's honestly gone unaffected thus far, according to my portfolio. Since I bought it, it has not dropped below my price, which means that it's been flying high. 6% of the portfolio is in Coca-Cola. That will go up. Honestly, if it was as efficient as Altria, it would be as big as Altria, but since Altria pays 84 cents for $41, and this only pays 41 cents for $56 right now, I'm less inclined to buy Coca-Cola because it hasn't been affected by the correction. So we've made money on Coca-Cola, $2 today, $84 total, but to me right now, Coca-Cola is not a buy because it has not been very affected by the scare. Next, we have AT&T, 62 shares. $2,244.40 of equity, $31.10 as our average cost. About 15% of the portfolio is an AT&T stock. I am an AT&T bull. Love AT&T. Only issue with this stock is that it's up $5 per share from where I bought it. This isn't unaffected by the scare. It's just people pay their phone bills in any economy. That's why I like AT&T so much. So they're down $60 today, up $3.16 from where I bought it. AbbVie, just like AT&T's, been a runner. As you can see, it's been a little bit more volatile in the past month than it has for a while. See, it's been running up and then it dipped down. It seems like it's kind of recovering now. Let's see where I bought it at. 60 shares, almost $5,300 of equity, $72.22. So that is up $10, $16 from where I bought it. 35% of the portfolio is in AbbVie stock. I'm way exposed to AbbVie, but I don't mind it because I think it's a phenomenal pharmaceutical play. My second favorite stock in the space. The only reason I bought this instead of Johnson & Johnson, which we'll get to that later, is because it was at such a deep discount in my opinion. I had to jump into it and had to jump into it aggressively because this stock is one of those just like Pepsi, Coca-Cola, Johnson & Johnson, 3M. It doesn't go on sale very often. And the only reason that it dipped so bad was because there were rumors that Humira was, the patent is expiring and other companies are going to be able to use that, and that they didn't have enough drugs in production to make up for the profits that they might lose due to Humira competition, and because they actually bought out Allergen, another company. It's called acquisition. When one company buys another, the buying company generally goes down. The company that's being bought goes up. And so AbbVie went down on bad press because the Humira patent was going up, and they lost value because they were buying another company. So I jumped in, and as you can see, that was a very good opportunity. I've been sitting on that, haven't really bought much since, and I am dividend efficient in AbbVie as well as AT&T. And actually, I am dividend efficient in Altria and in AT&T. It's just not at the current price. So I was dividend efficient in AT&T till they went up. But anyways, I'm up on AbbVie, down $23 today, up almost $1,000 at $964 or 22%. Up on AbbVie. Next, we have a SKT. This is my alternative for when AbbVie and AT&T, the other two stocks that pay me this month, are what I feel are overpriced based upon my average cost. So since I bought AbbVie at such a deep discount, I get about $72 from them, but I'm not going to be buying AbbVie because it's at 88, and I'm the same way with AT&T. I get about $31 from AT&T. See, I was pretty much dividend efficient in it, but since it's up so high, I need an alternative investment, and with that alternative investing, I chose SKT. Now, I get it's a mall REIT. I know it's not the safest play, but it's cheap. It's something I can buy 7 shares of every time the other two companies pay me this month, so I can buy in bulk with SKT. It is a dividend aristocrat, and it pays 35.7 cents per share. So I'm making $4 more just because of the dividend payment that I got from AbbVie and AT&T. But let's look and see how the stock has performed. So it's down 34 cents today, have 13 shares, $155 of equity. So this is nothing compared to like the big players of AT&T and AbbVie. As you saw there, 13 shares, $13.93 is my average cost. Be a great time to buy right now because it's down so far from my average cost. 1% of the portfolio, like I said, it's a drop in the bucket in the overall portfolio. It's not a very big position. Down $4 today, down 25 total. Not a huge deal for me. Next, we have Target. This one seems to be affected by the virus, as you can tell. It's down about $5 for the month. That was when the scares originally happened. Or the week, it's down $6. So as you can see, it's been affected by the virus. So 10 shares, $1,000 of equity, $87.68. This is one of those that I might just have to bite the bullet. I keep waiting for it to go down. It's not going to go back down, I don't think. I mean, eventually it might, but I was really hoping to see like a negative 15 or negative 20 on this company. Not happening. It's a dividend king, so it's one of those I'll happily buy. It's about the same size as Altria or Coca-Cola. This is one of those that I will buy. I'm just sitting on it because I'm waiting for it to go back down. Down $34 today, up 180 total, or 20%. Up 20% on Target. Next, ExxonMobil. This is the down darling of the portfolio. It's been heavily affected by the coronavirus. Not as bad as some, but as you can see, in the last month, it's lost $10. Last 3 months, it's lost 16. Years, lost 25. Years, lost 37. So if you would have been putting money into this, you've been losing it, but that's okay. I still love the dividend. Its dividend's been very, very consistent, and they have become a dividend aristocrat, meaning that they paid and increased the dividend for 25 years or more. So at 51.27, we have 29 shares, almost $1,500 of equity, $73.50 is our average cost, about 10%, 9.7% of the portfolio, so about 10% of the portfolio is in ExxonMobil, down $75 today, down $644 total. This and SKT are my two biggest losers right now, I believe, and I will be buying more ExxonMobil because that dividend's still really nice. Next, we have Walgreens. I have 1 share at $46, $54.60. I'm down $8 a share, 0.3%. So this is just a tiny percentage of the portfolio. I will be buying more. They're close to aristocrat status. I believe this year, if they increase it, they'll be at 48 years. So I have 2 more until they become a dividend king, which means that they paid for 50 or 50 plus years consecutively. So every year they've increased their dividend for 50 plus years. We're down $2 today. We're down $8 total. So that is the overall portfolio. Some stocks have been affected more than others in the portfolio. For me personally, Altria is a buy. SKT is a buy, Exxon is a buy, and Walgreens. So half the portfolio is a buy for me currently. Going through, I'll go through the individual stocks real quick that I'm looking at for purchases. $74 in the middle, not buying it. FRT is a buy for me. Disney is a buy for me. That's only $6 above, way cheaper than 153. So both FRT and Disney are buys. Next, PepsiCo. No, it's closer to its low than its high. Kimberly-Clark is the same way. Illinois Toolworks, and still closer to the high than the low, so I'd still say not a buy for me. Colgate's closer to its high than its low. Lowe's is closer to its high than its low. Procter & Gamble, same deal. American Express right now for me is actually a buy, so there's 4 buys now. Then Clorox, not touching it. Union Pacific, not touching it. Carnival is also a buy. There's 5 buys now in the watch list. Dominion, nope. American States Water, not touching it. Waste Management, nope. Johnson & Johnson, possibly. It's about $10, but yeah. So Johnson & Johnson's a buy. 3M is definitely a buy. McDonald's I'm not touching, and Home Depot I am definitely not touching. So right now, currently on my watch list, FRT is a buy. Disney is a buy. American Express is a buy. Carnival, Johnson & Johnson, and 3M are all buys. So there's 6 buys on my portfolio. I'm looking to put $1,000 in the market relatively soon, which I'm just gonna do the math real quick, see if I can buy all the companies currently that are on discount. So about 230, 340, 370, 4, 520, 670. Yeah, I could buy every single company that's on. If I transfer $1,000, I can. So look for that, guys. I will be transferring money soon. And as I said earlier in the video, for me, this scare is just market psychology. You buy when it's low, you sell when it's high. So buying now, adding to shares in my current portfolio, because I would have, if it only cost me $600, $700 to invest into every company that's low right now on my watch list, I could also be buying a share of, Walgreens, a couple shares of ExxonMobil, see what I mean, and a share or 2 of Altria Group. So that's the goal. I'm going to be transferring cash over, buying stocks that I feel like are at least fair value or at a deep discount, and I will show you guys when I transfer that cash. So for now, guys, the next dividend payment, which will be this month, which will be from Target, also Exxon and Walgreens, will only come out to about $35, but I will be transferring money soon. I just had a job interview, and I'll let you guys know if I get that. But if I get that job, and if I have cash coming in, I will have no issue transferring over $1,000. So that will be the update, guys, but that is 100 episodes down. Real quick, let me know if you guys have bought anything. I'm really bullish on Carnival and Exxon, and American Express right now. I had no idea American Express was so low. That is a Buffett company. I want a credit card company. To me, that's very well valued right now, and it pays a pretty good dividend for the price. So remember, guys, if you've bought anything, let me know down in the comments on what you guys have purchased in this virus scare. If you haven't yet, make sure you hit that subscribe button on my dividend channel, That Dividend Guy, and feel free to comment below on stocks you like, stocks on my watch list, and follow me on Instagram at the same handle on YouTube as I do on Instagram at That Dividend Guy. You can reach me there, direct message me, talk about stocks, life, whatever. I'm a pretty much an open book, so feel free to subscribe, hit the bell notification so you don't miss any updates here. I do post on Instagram from time to time. I'm more active here, but if you want to contact me directly, that's the best way to do it. Just hit me up on Instagram. So thank you guys so much for watching. Thank you for subscribing. Thank you for the views. I really do appreciate it. It's 100 episodes done. Let's make it 200, guys. It'll be here before you know it. Thank you so much for watching. Remember to keep investing even when the market's afraid. That's the best time to buy. Don't get too discouraged. Just keep on pushing, guys. Remember, I'm not your financial advisor. I'm not recommending any of these stocks. I'm just showing you what I'm doing. So you're fully liable for what you choose to buy. But with that said, guys, I'll see you tomorrow with another dividend investing video. Take care.